Palantir. We have some major changes going on in regards to Palantir's business model. I'm going to take you through in this video here today. I'm going to show you my valuation model on Palantir stock and show you how much these changes matter for where Palantir's stock price is going in the future, the revenues are going for the future, the margins are going in the future, and the earnings per share. I'm going to take you through all that. I'm going to explain exactly all of these major changes. Additionally, we're talking about where the stock price is headed from here. People are looking and they're like, okay, where's this baby going? Are we going 45? Are we going 50, 55, 60, $70? I'll speak to you and tell you my opinion on where the stock is likely headed from now. Okay, I'll also take you through the most important things that Alex Karp said on that conference call, which he said some very important things about the future of Palantir. Since the end of 2022, Palantir stock is up well over 500 percentage points. Now at this point in time, I want to say congratulations to everybody that has been part of this community, everybody that's made game-changing money and on the way to being life-changing money for a lot of folks. Give yourself a pat on the back for studying up on this company, putting in the research work, and obviously, enjoying the fruits of that work you put in regards to this one. There's one favor I ask from you guys: take 1 second out of your day, please, and hit the like button on this video. That's all I ask in return. Hit the like button. That's all I ask, okay? If you want to be subscribed here, it's free to be subscribed to the channel. You can hit that subscribe button down there. We just hit a new all-time high subscribers in the history channel. I appreciate each and every one of you for being here. Additionally, if you're a Palantir shareholder and you have not applied to join my private stock group, you might want to go ahead and do that. We have one of the most amazing Palantir communities out there, right? And you got to understand, there's a lot of people that were not part of Palantir communities like mine that were selling the stock back when it went to $10, $15, $20, right? They didn't have any other people to talk about this stock with, right? And they made a lot of bad decisions. Meanwhile, people in the private stock group, they were buying the stock at $6, $7, $8, $10, $15, $20, holding the stock, right? And we've just got a tremendous community, always sharing everything news related, stuff that you can't find anywhere else inside that private group. And it's absolutely amazing. So if you want to apply to join us in there, that will be the pinned comment down there here today. Okay. Alrighty. This right here, if I just had to show you one thing and one thing only from everything I had to show you in this video, this would be the thing right in front of your face right there. I would show you that before I showed you how much Palantir beat analyst expectations and my valuations models for the stock. This would be, if I could only show you one thing, this is it. Okay. What I'm showing you there right now is a very famous thing if you ever have valued more like SaaS-related type companies, right? Which Palantir kind of gets put into the software as a service type business model, right? Even though they might differ a little bit, they get put in that category. And so when you're judging these sorts of business models, there's something called the rule of 40 that's extremely important and everybody always looks at. And it basically, if you're over 40 when it comes to year-over-year revenue growth and then adding adjusted operating margin on top, if you're over 40, usually that's seen as like a very healthy SaaS-related number. And the more you are over 40, the more special you are. So let's say you're at 45%, 50%, 55%. Now people are looking like, oh my gosh, this company's very special. They got big revenue growth. They got great operating margins. This is a very healthy company. If you ever go under 40%, people start to worry about you. And the further you go under 40%, the more people are like, oh, this is not looking very good for this company, right? Palantir is at a shocking 68% when it comes to rule of 40. This is ridiculous, right? This was a time period where people were a little concerned about Palantir because they were at exactly 40%, 42%, 38%, but then they've just been increasing at 46%, 54%, 57%, a shocking 64% last quarter, and people are like, it can't go any better than that. And then they put up a 68% number, and now people are like, could they be going rule of 70? Is this company going to go 70% plus here in the next quarter? And it's a real potential. So if I had nothing else I could show you in this video, that's it. And that's just like, you're dealing with a very special company when you're talking about these sorts of numbers. And ask anybody that's ever valued these sorts of SaaS companies, and they'll tell you this is ridiculous. That's special, like the 1% of the 1% special, right? Additionally, when you look at their income statement of this company, this is an A+. Perfection income statement. So look at revenues. Revenues went to $725 million from $558 million. That was like a $167 million gain on just a year-over-year basis in a 3-month span. That's insane. Cost of revenue only went up $39 million roughly. So gross profit was up around $128 million year over year for this company. Sales and marketing, they kept that in check. Now, they increased all these spends, but the thing is, their revenue was up 167 million. So they had a lot of room to weigh up sales and marketing, R&D, and G&A if they wanted to, but they didn't really do it. They spent more on all categories, but they kept the expenses in check in a major way, which just proves Alex Karp and the CFO of the company are really watching the expense profile of this company. And they're really focused on not just growing for growing's sake. They're really focused on growing big revenues, but also the margins of this company. Income from operations grew to $113 million versus $39 million in the same quarter last year. Oh my gosh. The interest income continues to pour in for this company. This is a crazy number. Like, I really want everybody to understand how crazy this next number is. They had interest income of $52 million in a 3-month span for basically just having their money in treasuries. How crazy is that, man? I mean, they're making over $15 million a month for just having money in treasuries. Like, imagine that. Imagine having a life where you can make $15 million plus a month for just having your money in guaranteed treasury. It's like crazy, right? As far as other income expense, they had an $8.1 million kind of more one-off expense versus a $3.1 million gain there. So that's over $10 million. It's like over $11 million of kind of difference there on a year-over-year basis, right? Which kind of hurts profitability, but their income from operations is so ridiculous. It still makes their net income look insane, right? Their net income went to $149 million this year versus $73 million in the same quarter last year. So they over 2x'd their net income. That's unbelievable. And did they even close to 2x their revenues? No, their revenue was up 30%. So when you can over 2x your bottom line and your top line is up 30%, then essentially so their bottom line's up over 100%, but their top line's up 30%. That means essentially, 70 cents plus of every dollar is heading down to that bottom line. That's special. That's very, very special of the new money coming in. So basically, the way to think about this is for every little bit of extra revenue dollars Palantir has coming in, a lot of that dollar is making its way down to that net income line. That's incredible, right? Look at the balance sheet. You want to talk about a fortress balance sheet? Look no further than this. So, I mean, this is what's crazy about Palantir. And you're not going to try finding another company like this. How many companies have an A+ income statement, right? And additionally have an A+ balance sheet? How many? Not many. Not many. I'm talking there's probably 20 or 30 companies in the entire public markets that have an A+ income statement and an A+ balance sheet. Like, you are the 1% of the 1%. And to think this company just got in the S&P 500 and they're already one of the most special companies in the world, that's crazy. Look at this. If you add up the cash and cash equivalents and marketable securities, they're well over $4.5 billion. That's incredible, right? Jeez. If you look at total liabilities, you add up all the liabilities on the balance sheet, they're at less than $1.2 billion, and they got over $4.5 billion in cash and marketable securities, cash equivalents. Like, that's ridiculous. So total stockholder equity on this company, about $4.5 billion versus $3.4 billion at the beginning of this year. These numbers are historic. Now, look at this. Ready to have your flapjacks flipped? Start looking at this. Look at this. 54% year-over-year growth in U.S. commercial. U.S. commercial business is booming for the company. Additionally, they had 13% quarter-over-quarter U.S. commercial revenue growth. I mean, a lot of companies had trouble growing 13% on a year-over-year basis. They did 13% on a quarter-over-quarter basis. That's ridiculous. Now, additionally, this is where you can get very excited about this company. They grew 77% year-over-year U.S. commercial customer count. Now, keep in mind, their revenue was not up 77% or even close to that, right? It was up 54%. So the way I would look at this is this essentially means there's likely bigger revenue growth acceleration probably coming in this company. Like, the revenue growth acceleration might not be done in regards to Palantir. Because at some point in time, these two numbers are likely going to get much more in line with each other, where this number's been far outstripping this number, okay? Because when Palantir lands a customer, they don't always land like a big contract rate initially. Sometimes they do, but a lot of times they won't, right? They have that relationship built there, then the company realizes how valuable Palantir can be to their business model, and maybe it can save them an extra $100 million every 2 years, and so next thing you know, right, the company signs a $100 million contract with Palantir over a 5-year span, right? because they look at it and they're like, man, we can get a huge positive ROI on this if we go with Palantir, right? Now, additionally, look at this, 73% year over year U.S. commercial remaining deal value. Woo-wee! That's an incredible number there. Look at GAAP net income for this company, generally accepted accounting principles. They're up to 143 million, right, from 71 million at the same point last year. It's a big milestone when you can get to 9 figures of net income, right? Not that many companies can do that. But when you start talking about multi-9 figures a year of GAAP net income, you're in a very special league. And they're going to be there like that. And we're talking, this is just each quarter. We're not talking about on an overall year. We're just talking about per 3 months. Oh my gosh, right? Special. Now, check this out here. Look at the operating income of this company. It went from $40 million at this time last year to $113 million. Jeez, like that's ridiculous. Like almost 200% growth year over year. Now, 2 years ago, the bears were saying, Palantir, oh, big deal. They're starting to make money on the bottom line, but you know what? They can only make money from treasury bills. And that was the bears' argument at first. They're only making money because of treasuries. If, the Fed lowers rates and the treasury money goes away, they're not going to make any money, right? Well, Palantir showed them, no, we're going to make operating income. And they started making operating income. And then people were like, oh, it's only a small amount of operating income. They can never blow it up to a big number. This latest quarter, they did $113 million of operating income, and that's showing no signs of like going down. Like they're going to continue to build that number significantly. Like at this point next year, we could be looking at this same quarter, we could be looking at $200 million to $300 million of operating income for a Q3 2025. $200 million to $300 million of operating income we could be looking at like at this point next year. Keep that in mind. Whew. Now, look at the rule of 40, as I spoke about earlier, year-over-year revenue growth plus adjusted operating margin, 68% for this company. Where's the top at? I don't know. I'm guessing it's somewhere around 70 to 72%. The top's probably coming soon in regards to this one, but who knows? Maybe it's not. Like what happens if they just keep growing this number steadily for like the next 2-3 years? Like that's a potential. What if next quarter is like 69%, then it's 70%, 72%, 73, 74? Like that's a potential as well. Don't rule it out, right? Now, U.S. revenue growth is where the real strength is for this company, right? 44%. If you look at U.S. commercial revenue growth, 54%. And, a lot of people were too bearish in regards to their numbers here. And I'm talking analysts and I'm talking a lot of retail investors as well. And a lot of people were too bearish with their numbers because they forgot that all the big government deals were coming through. Government had been lagging big time, but a lot of government deals came through over the summer, right? And so that was going to add up to the revenue in this particular quarter, and sure enough, it did. And so U.S. government revenue ended up growing 40% year over year. So that was a great number by Palantir. Commercial revenue growth, 27% overall. Now, keep in mind, U.S. commercial revenue growth was 54%. So your brain should tell you something here. Just to say something's off. What is off? International is insanely weak for the company. Insanely weak for the company. Because the fact that they did commercial revenue growth at 27%, but the U.S. was up 54%, that means international is like lagging bad, right? Total revenue growth was 30% for the company, but yet if you look at U.S. government, that was up 40%, right? Look at U.S. revenue growth. U.S. revenue growth was up 44%, but the company's total revenue growth was only up 30%. So your brain should say something's wrong here. Like, what's going on? International is insanely weak. Now, there's 2 ways you could look at this, right? One is you can just say, man, like Palantir is never going to be able to do good numbers in Europe. Like international is just insanely weak. What is it with those Europeans? Do they not care about technology, right? You could look at it that way. I look at it a little bit different. Europe will adopt these technologies. Europe will adopt Palantir. You just can't, you can resist it at first if you want, but you're going to start to understand like Palantir is going to be a game changer for your business model and for government agencies. And so it's just a matter of time before the European market and international in general starts to pick up substantially and start helping Palantir substantially. Right? And so right now, the international business, just think of it as a massive headwind on the company. Like, oh my gosh, like, you're running up a hill and the wind's just coming against you and you're like, oh my gosh, this is brutal. That's Palantir right now when it comes to international business. I don't think it's going to be like that forever. I think actually in 2025, in 2026, that headwind could actually start, keyword is start, to move to a tailwind. The European market is just slow, and that's why Europe does not have the top tech companies. This is one of the key reasons why US companies end up running the world, right? And then Europe just tries to figure out how to regulate stuff. But you look at all the top real big tech companies, the ones that matter the most, the ones that have the hundreds of billions of dollar market cap to trillions of dollars, they're all US-based companies because the US moves fast with tech. We adopt the technologies, we get it going. Europeans, they're a little slower in regards to getting this tech over, but they will get it. No different than they adopted every other technology over time. And so just that is something to keep in mind there. The European market and international in general, it will go from a massive headwind to a tailwind in future years, and that's going to help out growth rates substantially. That's still coming, okay? Now, here's the other part. If you look at total revenue excluding strategic commercial contracts, right, kind of the SPAC situation, revenue actually would have been up 32% in the quarter. This has been another major headwind. So we just spoke about international has been a big headwind on the company. This whole SPAC situation has also been a headwind on the company for really the past year or so because they kind of moved out of that space. But this was something that's been weighing against results, and it weighed against the results again, right? 32% would have been their revenue growth rate if it wasn't for this. So this starts to become really a non-factor in 2025, which once again is going to be something that's going to help out Palantir's growth rate. So once again, this growth acceleration phase that quarter in and quarter out, people start thinking like it has to be over, like the growth acceleration, they can't do it anymore, there's no way. This might not be done, folks. We might still be going higher with revenue growth rates. We might go to 31%, 32%, 33%, 35%, 37%, maybe a 40% number. I'm not going to go that far, right? But the story is likely not over in regards to growth acceleration, right? Now, additionally here, check this out. We continue to invest aggressively in AIP and the US while driving operating leverage at scale. So they show their Q3 2024 adjusted operating income, $276 million, and that was a margin of 38%, adjusted operating margin of 38%, which is shocking, right? Once again, if we look at this quarter last year, 29% was adjusted operating margin. So they improved 900 basis points. 900 basis points on just a year-over-year basis. You got to be flipping my flapjacks. Look at U.S. commercial customer count here. 77% growth year over year. Customer count in general was up 39%, and commercial customer count was up 51%. And imagine when the European market actually starts rolling. Imagine that. In the rest of the world is in general. Like, holy smokers, that's going to be no dang jokers, right? Now, additionally, check this out. They did 104 deals in the quarter that were at least $1 million deals. Once again, Palantir is working with the big money folks, right? They did 36 deals of at least $5 million, but the most shocking number of all of them, in my personal opinion, was that number, 16. 16 deals in the quarter they did, which were at least $10 million. Incredible number. Now, this is very important here. This is very, very important, the cash flows of this company. So if you look at cash from operations, 58% margin, $420 million in the quarter. But adjusted free cash flow was at a 60% margin, $435 million of adjusted free cash flow in the quarter. What? And that compares with this same quarter last year, they were at $141 million. Oh my gosh. A 25% margin to a 60% margin when it comes to adjusted free cash flow. Like, these numbers are startlingly good. Like, it's ridiculous, right? This is crazy, and we'll talk about in a moment what they're going to do with all this money, because it's a lot of money, and it's not going to stop coming in anytime soon, right? Now, in terms of their guidance here, they guided for $767 million to $771 million. Keep in mind, they'll probably beat that number. Probably. Now, I would not expect a huge beat, and the reason being is this quarter they're in now, this is an October, November, December quarter, right? Holiday season, and you also have the election. And so a lot of companies are a little more on edge about doing a deal in this particular quarter. A lot of them will be much more happy to do deals in the first quarter of 2025, so Q1. So I think they could potentially beat the numbers they put out there, but I'm not expecting a gargantuan beat like this past quarter was, where they blow analyst expectations, because they did 726 million this past quarter. Analysts were at about 703. So that's a substantial beat. They beat by like $23 million, right? I'm not expecting that big of a beat. I think it's going to be a much smaller beat next quarter because of the just kind of companies move slow in the holiday season, right? People are on vacation and, you know, the election, all that stuff has to happen, right? Q1, people get back to work and they start doing deals and they're like, let's make this happen, right? So that's just something to keep in mind there. But remember, analysts were at 744 million for this next quarter, and their midpoint guide is 769 million. So basically their midpoint, Palantir's midpoint, is $25 million ahead of where analysts were at on average. That is substantial. Adjusted income from operations are talking about a midpoint of $300 million. Like I said, the money's not going to stop pouring in. It's just going to get bigger and bigger. Now, here's the thing. I had predictions. I put my predictions on X. I don't know if you guys follow me on X or not. If you want to follow me, I always keep that in the description area of all my videos. I keep my Instagram down there, and I also keep my X page if you're ever interested in following me on Instagram or X, right? But I posted this on X here today. I said my prediction for Palantir earnings. I said EPS comes in at 9 or 10 cents. Analysts were at 9 cents. The company came in at 10 cents, right? I said revenue is going to come in 705 to 725. Analysts were at 703. So I was much more, my midpoint was basically 715. So I was about $12 million ahead of where analysts were at. And they even beat my numbers. They came in with 726. So even though I was bullish, they came in and even beat my bullish outcome, which is pretty dang impressive. Now, I said for the December quarter, I think the guidance is going to be $760 million to $800 million. Analysts are at $744 million. So my midpoint was $780 million for the guide. The company came in and guided $769 million for their midpoint of the guide, right? So about $11 million under my midpoint. But keep in mind, they might still end up hitting my number. Like they might still hit my number or get very close to it. Maybe they do a 777. Oh, that would be a good sign, right? I said, if for any reason Alex Karp and the team come under analyst expectations, the stock will sell off heavy. There's a huge quarter for Palantir, right? And obviously we see where the numbers that came through at. So let me show you some big comments Alex Karp said on the conference call that are substantial, and then we'll go through my valuation models and how much things have changed and talk about where the stock price is going from here. So these are some of the 7 biggest things, at least in my opinion, Alex Karp said on the conference call. He started out the conference call just being funny. He said, well, given how strong our results are, I feel like we should just go home. So that was a little ridiculous and funny at the same time, like respect, okay? Second thing he said I thought was substantial, and he has hinted at this for about a year now. He's been hinting at this, but I thought he came across the most direct I've ever seen him. And he basically just flat out said LLMs are the commodity. He says everybody's trying to assign this huge value to LLMs, and they think like LLMs is where the real value is here. And he basically just flat out said LLMs are a commodity. What we do is a special part. But LLMs are just going to be a dime a dozen over time. And I've got to say, as somebody that pays attention to what all the big tech companies are doing and then the VC-related companies, to me it does look like LLMs long-term will just kind of be commoditized. It really does look like that. It looks like there's going to be special work done on other companies when it comes to AI, but I think LLMs, large language models, are a little bit more of like a distraction in regards to the whole thing and thinking about like that's where all the value is. It doesn't actually look like that, right? He says, and this is, I kind of simplified some of this stuff because you know Alex Karp, he can go on like a 20-minute tangent. He wasn't that long, but he can, get asked one question. He's talking, philosophy for 5 minutes, right? So I simplified some of this guy for you guys, okay? But basically the gist of it, he said the data processing is where the magic is. Cutting decisions down to 1 hour that these decisions might used to take 5 hours or 50 hours or things like that, right? Or taking a massive amount of people to try to figure this out. Now, using some product like Foundry from Palantir, these decisions can be cut down immensely. And that is whether you're on the battlefield or whether you're in the boardroom, right? Another simplified thing here that I simplified for you guys is basically, he said, the focus is on the product, not the sales staff. He says, we don't want to be a commodity product that everyone is forced to use and hates, which is something that definitely, there's a lot of companies that come to mind when you think about companies that people really don't like it. I even heard about, I've studied all the big tech companies, and I've heard like even Oracle's product, like a lot of people don't like that product, but basically you have to use it, right? I've heard that about a lot of Microsoft's products over time, that a lot of people don't like Microsoft's products, but they just, you got to use it. And he's basically saying we're not just going to be a commodity product like all these other folks do and they tie you in. People are actually going to want to use our products and love to use our products, right? Also simplify this, but basically the gist of it, he said, we're focused on margins and high growth, not just high growth like many companies in our position, because basically there's some pushback here with Palantir about, okay, revenue growth is at 30%. There's such a crazy demand for AIP. Why not just spend crazy money on marketing and sales? Go hire, go spend an additional $50 million a quarter on sales staff, right? $50 million a quarter is going to get you a lot of salespeople, and Palantir could do that, right? Why not spend another $50 million a quarter or $20 million a quarter or whatever on marketing and run ads on football games and all these sorts of things, right? And basically, he said that we don't need to do that. Our product's special enough. We really focus on our product, and we're focused on not just growing to grow. We're focused on at the end of the day having great margins as well, right? Which is a good thing, I think, certainly, and that's just a prudent action, especially if you ever get into any struggling economy or something like that, right? Now, also simplified this, but he basically said word of mouth is a huge sales force for Palantir. I've talked about this point many times before in regards to Palantir. If you're an executive of a company and you bring in Palantir, for your company, and you think it's a game-changing product and it, helps your business save a bunch of money, and then you go get a job at another company, being an executive of a different role, and that company doesn't have Palantir, you're going to say, hey, we need to bring Palantir because it's going to be able to help us for XYZ reason. So as Palantir scales and gets bigger and bigger and more customers, it's going to be a lot of word of mouth that spreads. That Palantir's, if Palantir's got the real deal Holyfield product, right? The word of mouth spreads from this company, this company, and people talk at conferences and all these sorts of things, and executives are always changing positions, and sales staff all these folks are always changing from this company, right? It's rare when somebody works at the same company for 30, 40 years. Nowadays, people are in and out of jobs 2-5 years, right? So this person says, hey, we at Palantir, my old company, helped us save $80 million a year because of XYZ reason. I bet you it could save us a bunch of money. Let's bring in Palantir. Let's see what they could do for us, right? Next thing you know, there's a boot camp that happens. Next thing you know, that company's signing a foundry deal, right? So word of mouth is huge, and that's honestly always the best sales for you as a business owner, right, is always word of mouth. It's always the most magical thing, right? Because that comes from like a trusted source rather than just seeing an ad on TV or an ad online or something like that, right? And he also said we're in it together with your retail investors, and obviously Palantir's got a huge retail community around it, so it's good to see that as well. Now, let me show you valuation model here and how substantially this changes Palantir's future now that we're talking about different sorts of growth rates, okay? Check this out. So, if we go back a year ago or so, everybody was kind of thinking Palantir was a 20% revenue growth story moving forward, right? And that was just a year ago. Like, a lot of people were convinced, like, Palantir, yeah, they're growing, but it's just probably going to be like a 20% growth number, right? So if you run, now keep in mind, everybody's expecting the net income to grow at a way faster clip than revenue grows, which is 100% what should happen, right? So if you were running your numbers at, let's say, a 20% revenue growth number, right? And then you were saying net income could grow at a 30% clip, right? Which puts the company at net income margins of 30% in 2028, which isn't crazy. Like, Palantir should be 30 to 35% net income margins come 2028, right? So that would put the company's revenue a little under $6 billion in 2028 and the net income around $1.7 billion. So if you've got a more SaaS-related company, which people, once again, put Palantir into a SaaS category, having 20% top-line growth, 30% bottom-line growth, you're going to command somewhere around a 50 to a 70 PE ratio, right? Because your growth rates are far outstripping an average stock in the market. I mean, we're talking about growth rates that are 3x or 4x in average stock in the market, so which means you're going to command likely a 3x or 4x valuation, never mind the SaaS component in your business, which gives you even a bigger, higher multiple, right? So if there was a situation to play out here, I mean, let me just call it how it is. Like, Palantir would be a dead money stock for years. You wouldn't be able to make any money in regards to this one. You'd have to wait till past 2028 to make any substantial money from here, right? If that was the growth rates we're talking about. But now we're not talking about those sorts of growth rates. Now we're talking about 30% growth rates, right? So now this changes everything for Palantir and how you think about the return profile moving forward for Palantir. So now if we're talking about 30% revenue growth on average from 2025 to 2028, we still, once again, we don't know where the top is. If you exclude the SPAC situation, Palantir grew revenue at 32% clip last quarter, right? or if you want to even not take that, they grew at 30%, right? The previous quarter, they grew at 27%. The previous quarter before that, I think they grew at, I want to say 25%, and then it went down and down from there, right? So they've been growing. We don't know where the top is. Maybe the top for revenue growth is 33% year over year. Maybe it's 35%. Maybe it's 37%. Maybe it's 40%. We don't know as of right now. All we know is it's likely higher than 30%. So when I ran my 2025 to 2028 projections here, I'm just saying like, hey, 30%, let's just run it at 30%, right? So if you run it at 30%, then net income growth should be around 45%, right? Which puts net income margins of this company around 33%. Because remember, they're going to far outgrow their revenue in regards to net income percent. It's not even going to be close, right? So if you're talking about a 30% top line grower and a 45% on average bottom line grower in the SaaS space, you're going to come in somewhere around a 75 to a 95 PE ratio, and that's probably being conservative. You're probably going to be in over 100. If you're growing top line 30% and bottom line 45% in your SaaS, you're probably 100 PE or more. But let's go a little more conservative, 75 to 95, right? That puts the stock somewhere around $90 to $114 come 2028, which gives you a compound annual growth rate on the low end of 21% and a compound annual growth rate on the high end of 29%. And that's from here where the stock is at, not where the stock was 2 years ago or 3 years ago or today. Today or a year ago or something like that. That's today, right? So there's massive compound annual growth still coming in the stock over the next 4 years if we're talking about these sorts of growth rates. Now, additionally, we don't know where the top is for Palantir's growth rates. If they get to like a 40% growth rate, then you have to throw this model out and you have to run completely new projections. Because then if you run a 40% number, let's say they get up to that number and they can do that for a few years in a row, right? Let's say this 4-year span, then you're talking about net income growth will probably be around a 60% number, maybe 65%. And then if you're talking about a 40% grower on top line and 60% plus on the bottom line per year, then you're talking about a PE of like 150 you're going to slap on the stock, 125. And then your compound annual growth rate's at a whole different stratosphere, right? So this is why everything is really changing in regards to Palantir massively, because the growth rates have changed massively. So when people say, well, it's the same company and the stock price is so much more expensive, well, if you're going to value this company, there's a big difference between valuing this company at a 12% growth rate versus a 20% growth rate versus a 30% growth rate versus potentially a much above 30% growth rate, right? This is something to keep in mind here. And they've been putting up these numbers in an election year where a lot of companies are kind of like, scared to make moves. They don't know what the next administration is going to do. What happens if we get a little more clarity? What happens if the businesses are feeling a little better about themselves? What are Palantir's numbers in that environment? And what happens when the international business picks up? Tell me what growth rates are at then. That's why Palantir has changed forever. Now, here's an open question for everybody, and I'll tell you what my opinion is as well. Palantir is going to likely start having cash flow pouring in of $1 to $3 billion per year over the next many years, right? What do you do with all that money? There's really 5 options, in my opinion, on what Palantir could do with all that money. Because like I said, $1 to $3 billion a year in cash flow is just going to be pouring into this company. And the cash stacks are going to get fatter and fatter for this company. So there's really 5 options, in my opinion. One is they could buy other softwares. Maybe smaller softwares that haven't really taken off yet. And they can sell that as some sort of software suite. Maybe attract certain clientele bases. Maybe they're having some trouble attracting, right? Get through the door and then sell Foundry, and it's kind of a Trojan horse situation. Like, that's potential. They could do that, right? They could buy back a ton of stock, which is always a potential. Now, ideally, the best time to buy back a stock is when your stock's price has been hit heavily, not when you're at all-time highs, right? So to buy back stock might not be the best thing to do necessarily in the short term. It might be, someday when people freak out over Palantir's growth rates, whether that's 6 months from now or 6 years from now or a year from now or whenever that is, people eventually, they'll flip out and they'll be like, and that's probably when you go do that big buyback. Like PayPal, for instance, is a great example of a company that's got a massive buyback right now, and they're buying back billions of dollars worth of stock every year, and they're just taking crazy amounts of shares off, right? Palantir could do that. I don't know if it's the best decision to do when your stock's at all-time highs, right? Third thing they could do is pay a dividend, a potential. I don't think that's the best use of capital for Palantir, in my opinion. It's too strong of a growth company. Someday Palantir might be a boring 10 or 15% grower a year. When that day comes, Palantir can focus on paying dividends because it'll be more of an ATM play. It'll be more of a cash flow play. And it'll be like, yeah, we don't have the growth rates we used to have back in the day, the 30% or more than 30%. But you know what? Now we're just a straight dividend payer and a buyback company. So those are probably plays down the road, in my opinion, in terms of buybacks and paying dividends. The fourth thing you could do is you could continue to add, to your R&D payroll, which I think they should continue to add to their R&D payroll. At the end of the day, Palantir's got one of the best workforces out there of any tech company. Why not continue to spend? Continue to come out with game-changing products and services. People imagine Palantir as this company with Gotham and Foundry and AIP and the products they have in the market, and they think like that's going to be what Palantir has forever. No, there's products and services. Palantir is going to be coming out a year from now, 2 years from now, 3 years from now, 5 years from now that we haven't seen yet as just shareholders of the company, that will be coming out that will probably be game-changing products for Palantir. That's going to open up whole new market segments for the company and whole new sales opportunities. So they can continue to, in my opinion, take a good amount of that cash flow, pour that into the employee force, and continue to build game-changing products and services that open your abilities up to continue to grow at a 30% plus clip, if not above that, right? And additionally, they can continue to pour some money into sales and marketing, which I think they should do as well. Why not? Don't go too crazy with it. Keep an eye on margins like the company wants to do. But with this sort of revenue growth, there's no question they have wiggle room to up R&D and up sales and marketing quite substantially over the next few years and continue to build this beast where they could be a sustainable 30% plus grower on that top line. I don't see any reason why they can't. If not achieve a 40 or 50% number, right? There's no top in regards to what Palantir could grow. That's the important thing you got to understand. There's no top here. Like sometimes people think like this is a max, Palantir, when they start doing 20% growth, people are like, oh, that must be the max. They can't grow anything above that, right? Now it's 30%. People think, oh, they can't grow anything above 30%. Sure, they could. They could grow 35%. They could grow 40%. They could grow 50% potentially, right? So that's where I would focus about. I wouldn't really buy out other softwares unless there's just something magical out there that they could see integrating it. But I would just continue to pour good amounts of this money into R&D and sales and marketing. And then with the excess money, continue to buy up treasuries and continue to just make more and more money from treasuries year after year after year. Because you got to understand, even if the yield from treasuries come down a bit, right? Palantir could be in a situation where they could still make more money because they have way more money in treasuries than the previous year, right? Keep that in mind. So, and then you just have a fortress balance sheet, and then you also make people feel very comfortable holding your stock even in recessions. Someday we're going to get a big unemployment recession where unemployment's going to go 6, 8, 10, 12%, right? I don't know whether that's a year from now or 3 years from now or 5 years from now. In that sort of environment, people get worried about stocks, right? When you're in a company with no debt and has billions and billions and billions and billions and billions of dollars of cash sitting on the balance sheet, you're not scared. You're like, oh, this is great. Like, this is awesome, right? And then you're not even really scared of inflation either. Because you're like, oh, even if the Fed ever goes up on rates again, well, shoot, we're just going to make a bunch more money on treasuries. And we don't have debt, so we don't have to worry about rates going up, right? That's fine for us. No. Where's the stock price going from here? So, the stock price, $50 is on deck for Palantir now at this point in time. So what I think is the stock heads toward 50. And then I think, and when I say heads towards 50, head toward 50 over this next bit of time. And then I think the stock's probably going to take a chill out period for 6 to 9 months. That does not mean the stock is going to crash or anything like that. It's just going to chill. And when I say chill, it's going to kind of be stuck in like a $45 to $55 range, and it's going to go up and it's going to go down. They're going to report quarters and the numbers are going to be really good, but they're not going to be super exciting in terms of like making everybody flip their flapjacks. And so the stock will just kind of like flounder in that $45 to $55 range for, in my opinion, 6 to 9 months. And that will be that for a while. And then when we start getting closer to 2026, right? And if we start hearing about continued revenue acceleration and maybe heading toward a 40% number, then we have our next big move for Palantir, and that's when Palantir moves to a $70+ stock. Then at that point in time, and we start talking about the stock at a $70, $75 somewhere in there roughly, okay? So there's definitely a lot of room there. As far as me personally with my shares, I'm holding these tight like a little kid holding a teddy bear. And I have 0% interest in selling my shares. 0%. I have 5,555 shares on the public account. 0, and I hold a bunch of shares in the Patreon portfolio as well. 0% interest in selling. Like, I'm not even like it. I don't care. put Palantir at 46 tomorrow, 47, put it at 50 tomorrow, I have no interest in selling the stock and trying to time it out. Even though I believe the stock will just kind of flounder for 6 to 9 months after that in the $45 to $55 range, I still have 0% interest in selling because I don't feel like dealing with the tax implications of that, right? And then dealing with like trying to time back in. No. None with a special company like Palantir that continues to delight to the upside. I hope you guys enjoyed today's video. I appreciate you all joining me as always. If you're looking to access my entire premium course library, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, if you're looking to get access to my private Discord chat in our unbelievable one-of-one Palantir community, click the pinned comment down there, apply to join us in there. Much love and have a great day.